I want to introduce our first keynote speaker, Tim Patterson, and Dara Albright. Dara is going to be taking over this session. Dara, welcome. Thanks for being with us, Tim. Thank you very much. Take it over. Thank you.
Thank you so much, Sydney. Always great to participate in your events, and really echo your sentiments from your opening, because you could not have said it better. So I just want to say good morning, everyone. Welcome. Glad everyone is able to join us here virtually this morning, and hope everyone is staying safe and healthy. We are honored to be here today with Tim Peterson of Cane Island Alternative Advisors and author of a number of Bitcoin research papers, including Bitcoin Spreads Like a Virus. And also, I'm going to say that based on a number of Tim's predictions, I'm going to be so bold as to also say that he's a clairvoyant. Today, we are here to speak with Tim about a topic that I'm sure is on everybody's mind right now, and it's how this virus, COVID-19, is impacting our financial markets and our global economies. So really excited. Tim, you want to just jump right in?
Yeah, thanks a lot, Dara. I'm very glad to be here. Thanks for having me.
Excellent. So let's just start. Let's just really just kind of get right into it. You know, you base some of your Bitcoin price predictions on Metcalfe law. Can you explain what that is and how that impacts your modeling and your forecasts?
Yeah, Metcalfe's law is a proven mathematical law that governs the principle that the value of a network is dependent on the size of a network. It has pretty broad application to just about any type of network, including the internet, telecommunications, payment systems, transportation systems. And by the way, I'm in the process of writing 2 books on this subject because there isn't a whole lot out there that explains it in detail. But I use it to value cryptocurrency because it works for all cryptocurrencies. And it has some unique properties that I think are just really elegant. One is that it's simple. It doesn't require a lot in the way of assumptions or mathematical gymnastics. All you have to do is count the number of connections between participants, and that's something that's easy to explain and easy to do. And if you've heard that saying, your network is your net worth, you know, that's literally true by Metcalfe's law. It's very versatile. I've used it to value Adobe Acrobat through the proliferation of PDF files, Square, which is a rival to PayPal, and I have research and data that I'll publish in the book that shows that Metcalfe's law was working for the telephone industry 40 years before Bob Metcalfe was even born. Wow. So I thought that was really kind of neat. So it works. It's been proven to work for Facebook and Tencent. I proved it out for Bitcoin in 3 papers now, and I have about 3 more that I'm still writing.
That's amazing. Really interesting. You stated that recently that without any, because we look at, you know, I'm looking kind of at how the markets have been trading over the last couple of weeks, you know, basically since the world changed. And, you know, we saw what the stock market have done, but there has been a lot of intervention, you know, with the Feds, central bank, et cetera, from all over the world. But, you know, here in the Bitcoin world, cryptocurrency world, it's been interesting because we've not seen, you know, obviously this is a decentralized platform. There's not been any kind of central bank or government intervention. And you had stated that without that, Bitcoin's price has naturally corrected to the equilibrium value as determined by Metcalfe's law. So what does that tell you in terms of the strength and viability of Bitcoin versus conventional asset classes, conventional markets?
Well, Bitcoin is one of the least regulated assets in the world. So I thought it was pretty interesting to see that Bitcoin's price seeks out its fair value or its equilibrium value over time, and not just recently, but throughout history. I've correctly called reversion to Metcalfe value publicly twice and months in advance. So one was in 2018, in July of 2018, I was giving a presentation in Sydney, and I said, here's what the December price will be. And I was accurate to within a couple $100. And then again in 2019, so last year between January and April, I said, well, here's what it'll be in December. And that's, you know, almost a year in advance. And I was accurate to within a couple $100. And the only thing I used was Metcalfe's law. I didn't make any assumptions or anything else. So the reason I mention this this reversion to value is that it's in contrast to what the Federal Reserve is doing and other central banks are doing right now to prop up prices. What they're doing is capitalism. It's not capitalism. It's a form of socialism. It's price setting via government intervention. And if the Federal Reserve left markets alone, prices would eventually reflect economic reality. And because there's nobody to intervene in Bitcoin, I think it's neat to see that you don't need all of this. Prices will go back to where they should be, and I think that lends credibility to free markets, and Bitcoin is an example of a free market.
So it's interesting that you say that, because you know, following this and seeing how this all works. First of all, I want to say on your predictions, by the way, you know, you've been spot on, and there have been a lot of people out there, experts in the space, been reluctant to call prices. You know, especially a year out, you know, people want even 5 years out. So it's, you know, it's interesting how spot on your predictions have been in the short term. Now, we're talking about going back to just kind of the Fed intervention here for a second. We've seen, you know, obviously we have the stimulus, we have the quantitative easing, you know, we're seeing, you know, the lowering of interest rates. Would you say that that's been helpful or harmful to both? You know, you could take it for, you know, both the crypto world as well as the conventional financial world.
Well, in the short term, it looks helpful. It looks helpful that prices are supported and we don't get this deep crash, or we try to avoid a depression. I disagree with the policy that's being implemented. And the reason is because there's this parable, I don't know if you've heard it, but it's called the fence paradox. And the parable of the fence paradox is, suppose you're at the edge of a cliff doing some sightseeing at the Grand Canyon. And a lot of people visit the Grand Canyon, and once in a while, some people will fall over the edge and die. And so people, usually governments, thinking they're being helpful, they'll put up a railing. And this railing creates a false sense of security because now people feel protected. So as a result, they take more risk, not less. They think the railing will save them, and everybody crowds around the railing to get a good view of the Grand Canyon. And eventually that railing will break, and you'll have dozens of people fall over the edge in a catastrophe. That's the fence paradox. If prices are supported by government or banks, then the downside risk appears mitigated, and investors will be less careful with their investments and would make what would otherwise be unwise investment choices. But you can't paper over reality. You can't borrow your way out of a debt crisis, and that's what's being done now. And this is just some rough numbers. I estimated at 2% GDP growth, which is, you know, pretty much what we could expect in good times. If we take all of that 2% GDP growth and pay down this $10 trillion of debt, it'll take 25 years. And that gets us to where we were pre-crisis. That's not paying the debt down to zero. That gets us to, you know, January of 2020. So that's 25 years of not using that growth to improve roads, improve schools, improve healthcare. We're just going to maintain our current level of economic output for 25 years. But that's what Americans do. We kick the debt can down the road so well, and it's worked in the past, and they can do it because in 10 or 20 or 30 years, it'll be somebody else's problem.
Yeah, but at some point, don't you run out of road?
At some point, you run out of road. But you know what? That decline, all you have to do is look at the Roman Empire. And that Rome wasn't built in a day, but it also didn't fall in a day. Rome's decline took place over like 100, 150 years. So you can have this death of 1,000 cuts, and you build up a tolerance to things like this. Like, well, we've borrowed money before, we borrowed money before, we borrowed money before. So maybe in 100 years, 120 years, it becomes a serious issue, and the economy truly is in a state of disarray. But like I said, we won't be here, so who cares?
Well, right. Well, our kids and our grandkids. So, you know, we still should do something. But it's you know, it's an interesting conversation to have, because when you talk about that and you put it into perspective like that, it makes you wonder whether or not, you know, a completely new system isn't going to be implemented and put into place at some point, and maybe even in our lifetime. And maybe that is, this decentralized finance system that we're starting to see emerge through the blockchain. It's interesting.
Yeah, I'm fairly confident that we're on the verge, that we're going through that process right now of remaking the monetary system. You see it in not just digital currency, but you see it with experimentation with negative rates and things like that. So yeah, I'd agree with that.
Yeah, I completely agree. It's going to be so interesting to watch. So let's talk a little bit about correlation. And if we kind of look back on the past few weeks, there were moments when the crypto markets and the equity markets were trading kind of in tandem. We saw those big dives where both markets were plummeting at the same time. And then we started to see something really interesting, it probably occurred after the stimulus and quantitative easing. And we started to see I think, an inflection point where they were really no longer trading in tandem. They were kind of moving at least a little bit more. And, I started watching, it looked like it was trading a little bit more in a negative correlation. Now, what do you make of that? Do you think that it could be a sign or an indication that maybe institutions were really more involved in the market, in the crypto market in 2019, that they led on, and when the equity markets were plummeting back a couple of weeks ago, it was really, the institutions that were saying, okay, we need to liquidate our Bitcoin positions and our crypto positions so that we can make margin calls or what have you, because, their other assets were taking a nosedive. Because, you look at it and especially if you look at the Twitter feeds of, people in the space and real advocates of Bitcoin and cryptocurrencies, these people are hodlers, or what we call holders, but they call hodlers. And so, it was interesting to see that when it did sort of turn in that negative, correlated direction, do you think that could have been a sign that maybe institutions at that point were fleeing and it was the hodlers left hodling?
Well, one of the great flaws in diversification is that it fails when you need it the most, which is in a crisis. And
that's a great quote.
Everything, when things drop, everything drops, and that's where you see correlations increase across every asset class, and that was certainly the case this past go around. In my book, with the measurements I'm using, I still see Bitcoin being very highly correlated to the U.S. stock market. Now, I haven't updated it for the past week, but I look at daily and weekly, and it's been huge. On a weekly basis, the U.S. stock market is accounted for 2/3 of Bitcoin's price changes. What that tells me is that the market doesn't know how to value Bitcoin. They don't know what it's worth. They're not looking at any fundamentals. So they've just decided, well, we'll treat it like equity with a premium and some volatility. And it's been trading at about 20% volatility, 1.2, so 20% more. And if you look at that, what you have is a leveraged S&P 500 in Bitcoin. And so it's no wonder people dump Bitcoin, because this is a time when they're trying to mitigate risk as opposed to take it on. And Bitcoin was seen to be more risky than the S&P 500. Therefore, it got dropped. And I think that's bad. Now, hopefully, eventually, it will work itself out, and Bitcoin will go back to trending on fundamentals. But in the meantime, I calculated that about 10% of Bitcoin users left the Bitcoin network on March 12th. And it's not clear whether those people will ever come back if they got scared and got shook out.
That was the day that it went down to like
right.
below 4,000.
The big crash. It was like 40% that day. Yeah.
It was funny when the stock market started, really diving at the end of February. And, and then, over the last couple of weeks, we would have these, major swings in a day, down 10%, down 15%. And, and it was funny to see all the people in the traditional markets going, crazy about these incredible swings, when I just kept thinking that's like a day of Bitcoin,
Yeah. Yeah. And I've had some exposure to Bitcoin through some Grayscale products. So my clients are actually used to that. And I sent them a letter on March 12th or 13th. I said, look, this is what's happening, right, to calm them. And I actually phoned them. And they said, oh, we're not worried about that. So I was kind of surprised. They had been inoculated to large volatility, to my my great surprise.
Right. That's actually really interesting, just from a behavioral kind of perspective, and looking at that. It's just, watching investor behavior and, just investors in this space. And it's also interesting because I've been following a little bit of what was happening just in the robo advisory space. And it was very interesting. You saw a lot of FinTech apps being downloaded during the time too, when the market was really tanking. It wasn't like people were leaving; they were actually opening up new accounts. And a lot of these people were millennials, because they're used to, I guess, ones that have been kind of trading Bitcoin now for a while, or just involved in the space or knowledgeable about the space. They're, it's almost as like they're conditioned to be more comfortable in a volatile environment, look for opportunities on the downside.
Absolutely. Yeah, I think that's encouraging. Interesting, since you mentioned it, the Google Trends searches for Dow and S&P 500 in the past 90 days has been twice what it was during the 2008 Great Recession and market decline. So
Wow.
People are definitely more in tune with what's going on in the market than they were 10 years ago.
Wow. That's, and I wonder if that's also because 10 years ago the crisis was really caused by the financial system. So I think that just left a sour taste in people's mouths, where this was a crisis that was, had nothing to do with the financial system. It was something, completely different and completely unexpected, and just it's just so different.
Yeah. Yeah.
Really, really interesting. So you also recently stated that Bitcoin is not digital gold, but that it has been behaving something like a defensive equity, such as a utility or precious metal, with heavy commercial use. Can you explain?
Yeah. So the interesting thing about Bitcoin is that it does have some properties like platinum does. Platinum has all of the money-like properties of gold. It's very rare. It's perhaps the rarest mineral on Earth, but it's got scarcity, resistance to decay. It's non-reactive to air and water. It's malleable. It's part of that group of noble metals that are used to make coins throughout history. So gold, silver, platinum. However, platinum has a higher melting point, and it conducts electricity. So that means it can be used in a wide variety of industrial applications. And because it's so rare, that is where it's used. If you try to use it for coins, the coins would be really, really tiny because there's just not very much of it. But for example, platinum improves the data storage capacity of hard disks, the magnetic hard disks, not the solid states. But every hard disk today contains platinum in its magnetic layer. And so this commercial application makes platinum susceptible to the business cycle. It's not good for money, but it is good for commercial uses. So it could be that Bitcoin, since it's used as a medium of exchange,
Right.
It has all these properties of gold, but it's also susceptible to the business cycle. When you have an economic downturn where spending is going to slow, then Bitcoin transactions would decline and Bitcoin would be expected to lose some of its value since the demand would drop. So maybe people view it as, hey, it's like platinum in that it has all these qualities and it's going to last and it's durable and portable and liquid and divisible, but it's got some economic exposure to the business cycle.
That's really interesting because, I also think that there are a lot of people out there that are still just first learning about Bitcoin. I mean, I was just even really interested in just following Facebook and just, my network on Facebook and friends, the people that I've known for years and years. And, as the markets were crashing, everyone was really focused on what the stock markets were doing, what they were buying, where they thought opportunities were, and, what everybody was trading. I mean, it was huge, conversation going on all around Facebook. No one, not one of them, was talking about Bitcoin. So I think we're still in these early stages where the mainstream really is unaware of what this really is. And I think that there are still a lot of people out there that don't even understand that there is a utility aspect of Bitcoin. Would you agree with that?
Yeah, it also behaves. I've got a chart on my website. It behaved very much, almost identically to real estate and platinum. And real estate's not something you would think of as necessarily risky, but it is defensive, and it did drop. It dropped just as much as Bitcoin did on that day, as did platinum. Wow. So there's clearly more to it than what meets the eye.
Yeah, that's really interesting. So do you see a path for Bitcoin to eventually become a safe haven?
Well, it's really hard when you lose 50% a day to say you're going to be a safe haven asset. And the cold hard reality is that when everything hit the fan in a genuine global crisis, people sold what they could and bought fiat. Okay, that's the world we live in today.
Right.
I think to change Bitcoin's behavior is going to require probably a change in the code and a change in people's understanding.
Oh.
That we've tried the change in the code, right? All these altcoins, that hasn't worked. All forks have failed, but there is an argument that Bitcoin is a defensive asset, and maybe a global crisis isn't the best way to evaluate something. Bitcoin's done really well in regional economic crises as a store of value and a crisis currency, and I don't expect that to change.
It's interesting also because, given that everything that happened with the virus, before this happened, we saw a lot of governments moving towards launching their own digital currency or digitizing their own currency. And it was interesting because, China was really on the forefront of that. They were, looking to be really the first out of the gate to digitize its currency. And they do have a goal. Their objective is to be the leading global currency. That's what they wanted. Do you see now with this, with the virus and maybe some backlash that China might be seeing from the international community, also, and you also combine in that, all of this central bank intervention and, manipulating all, the prices of all these different currencies. Do you see that as ultimately driving Bitcoin towards that safe haven status?
Well, so if you mentioned China, so let's set the background here first. So China is waging a low-intensity economic war against the United States. And dethroning or disrupting the US dollar serves their economic interests in that regard. Being the world's reserve currency means that countries overweight the dollar. And that makes it easier for the US to borrow money. And if the dollar lost its reserve currency status, then an equal weight dollar position would have a real negative impact on interest rates and make it more difficult to borrow money to finance growth. Okay, so if China wants to be the world's reserve currency, they would have that status, and they would find it easier to finance their growth with debt. Now, it's not just China, but Europe and Japan believe a digital currency is a necessity. A necessity. I went to a luncheon with Rob Kaplan, who's the president of the Dallas Federal Reserve Bank, and he made specific mention of digital currency having the potential to displace the dollar. And his concern is not necessarily about digital currencies, but that the US will not implement its own digital dollar in time, and therefore the US dollar would lose reserve currency status, and that would have devastating impact on US debt and borrowing. That's his concern. So I think China they're going to play this in a way that works to their advantage, and they're probably going to support Bitcoin if it works to their advantage in disrupting the US. But if it's going to disrupt their own economic goals, then they're not going to support Bitcoin. And that's why you've seen this back and forth in China about it's banning it, it's not banning it. They're trying to figure out what works best to their own economic advantage.
So it's interesting because, well, first, you think that China's plans to actually create a global digital currency have now been foiled because of the backlash that they're receiving from the international community?
Well, yeah, maybe in the short term. In the short term, I think people are going to be very, very upset with China, and I don't know how long that's going to last. Whether that's months or years. I know that you can't. You can't go the route of retaliation in history. That just hasn't worked out well. We tried it with Germany in World War I, and the result was World War II. So, but there's going to be something happening. I don't know that it's really difficult to say at this point, to be honest, what happens, because I think a lot of things are going to change. There are a lot of moving parts in this. For example, does the EU even stay together? Are they even going to be around in 4 or 5 years? So if there's no euro, what does that do? So China's relative position would increase at that point automatically. So there's a lot of moving parts to this.
Yeah, that's actually really interesting. Well, one thing we do know about China is that they like to stockpile. They stockpile gold. There were reports recently they were stockpiling oil as the prices were declining. Do you think that they've started or maybe intend to start stockpiling Bitcoin?
Yeah, darn that anonymity aspect of Bitcoin. We don't know who's got it, right?
Right.
Look, I think anything that might disrupt China's currency management regime would be unfavorable to China. And the Chinese rely on their currency valuation a lot more than other countries do. They don't have the same economic tools as the US does. So one of the ways they manage their economy is through currency. I think that if it works for them in the short term to do something with Bitcoin that may help promote their interests or destabilize, for example, the US dollar, they'll do that. But in the long run, no. They're going to want their currency to be on the top, and that means in the long run, they will be unquestionably against Bitcoin.
Interesting. So where do you think we are now, looking at the overall global markets? First of all, are we right now in a correction? Is this a bear market? I mean, what does this look like to you? And I know, people should actually be encouraged to go to your website and look at your charts and your Twitter feed too, because you really post some really eye-opening charts on there that really kind of put things into perspective. So where do you think we are now? Is it a correction? Is it a bear market?
Yeah, that's easy to answer. If you're long stocks, we're in a correction, and if you're short stocks, we're in a bear market.
Right.
Look, the thing is, we don't really know because the Federal Reserve has obscured price discovery. You can't have price stability, which is their mandate, without price discovery. So I see the Fed's actions as counter to its mandate of price stability, at least in the short term. There's no question that things are going to be bad fundamentally for a while, but we don't know how bad, and we don't know for how long. And usually with that type of uncertainty, you would see markets discounted more than they are now. But like I mentioned before, policy leaders have decided to borrow from the future, and we're probably in a short but deep economic recession with an artificially inflated market. It's kind of like, suppose you're driving down the street and there's this giant deep crack in the road that you have to cross, and it's maybe 1 or 2 tire widths wide. How do you get over that? Well, the policy that they've chosen to do is just drive real fast, Dukes of Hazzard style, and just run over the crack as quickly as possible, get it over with, because the other side of the road, on the other side of that crack, is 2021, 2022, which is some normalcy.
These are great. I love all these analogies. I'm going to actually write these down, and when this is all over, when I listen to this broadcast again, the video, and tweet some of those, because these are pretty amazing. So do you think we're not headed for, maybe this is a deep recession, but we're not really headed for this, the next Great Depression that people are fearful about right now?
Yeah, I could answer that question if the Federal Reserve were not obscuring what's actually happening in the markets and in the economy. Because all I know is the fundamentals are very bad, but the typical history of recessions and depressions is that the deeper they are, the shorter they are.
Right.
So this one's very, very deep, which tells me it's also probably going to be very, very short. Prior to this, there was nothing structurally unsound about the economy. This was not business cycle driven. This was, nothing like that. So what happens is we come out of this on the other side with a debt to GDP ratio of about 1, which is not the worst in the world. Other countries have much higher and they get along just fine. So I think that's the course that we're in. So I don't necessarily see a depression coming, but I do see economic disruption coming, and that was going to take place regardless of coronavirus or not.
Oh, well, I think if there is some sort of a depression, we've already all have experienced what it's like to wait online to get into a supermarket now. So we all sort of had a little bit of a taste, so to speak. So also we have something coming up that people in the crypto space and Bitcoin hodlers and enthusiasts have really been following, and that's the Bitcoin halving event that's coming up in the next couple of weeks. Could you talk a little bit about what that is and what are the implications to the price of Bitcoin?
Yeah, the Bitcoin halving is a reduction in the production rate of Bitcoin, and next month it's expected to be cut in half. We're going to have 12. Let's see, we're at 12.5 every 10 minutes now. So we're producing 50,000 Bitcoins a month right now. New Bitcoins are getting created. And starting the second half of the year, we're going to be having half that. So 25,000 new Bitcoins per month will be created. I will say that this halving is going to be different from everyone that came before it and everyone that comes since. And I just want to leave that tease out there. It's positive for price, but I am writing a research note on specifically this topic and the effect of halving will have on a price. So I would encourage people to check my website in a few days. It's cane-island.digital. So Cane Island Digital, CANE-island.digital. And there's something really, really different about this halving that hasn't happened before.
Interesting. I look forward to seeing that. Do you also see, I want to just switch gears a little bit because, before this all happened and really kind of in the beginning, when the beginning of the year started, but, before all this craziness, we were starting to see financial advisors that were getting more and more engaged in the space. From your standpoint, do you see these recent market conditions being an impetus or an obstacle to that for financial advisors recommending Bitcoin? Or do you think that maybe they're looking at it as, hey, now you really do need to have, that maybe 1% of your portfolio, diversified and allocated to this asset class?
Well, that's a good question. I don't think that in the current environment, there's going to be a lot of advisors recommending Bitcoin. And part of the problem is, just as a practical matter, it's hard to get Bitcoin into a client portfolio unless it's securitized. Just as an investment manager myself, if I wanted to add pure Bitcoin or Ripple or anything else, I would need twice as many accounts, twice the number of custodian relationships. I'd need the state of Texas wanted me to have a whole separate consulting arm, compliance consulting arm just for cryptocurrency.
Oh,
and
wow.
that's a significant burden on any advisor. So if you've got 100, it's bad enough to manage 400 client accounts. And now you got to manage 800 client accounts and reconcile all that for really no benefit to you. So the fact that it's not securitized really hinders adoption. It really does. But that's by design. The SEC has made it clear, and they've actually told these other firms, stop sending us the applications for an ETF because we're not going to approve them. We're not going to approve them until Bitcoin price is no longer manipulated. Well, who polices price manipulation? That's the SEC and the government. So the way things are now is because that's the way they want them to be. I just can only conclude that no ETF serves the purposes of the US government. They're happy to let the manipulation continue, issue warnings to investors, and deny an ETF that would otherwise help stabilize the market.
That's interesting. So I guess then you don't believe that the virus will expedite or help the cause for a Bitcoin ETF. And
we're not going to have an ETF for 5 or 10 years. It's too political. It's too political. These people are political appointees. They're appointed by the president. Trump has come out and said, I'm not a fan of Bitcoin. And that's the end of it. I mean, that's it. These people are not going to go against that.
Interesting. So I have one final question, and I guess as this sort of relates also just to the retail market and for financial advisors accessing these type of products for their retail clients. There are a lot of people out there that are right now especially concerned about their retirement portfolios. And it was interesting. I saw something on Twitter the other day, or maybe it was an article. There was someone that came out and said that people are going to be eventually able to retire on one Bitcoin, just one. What are your thoughts on that?
Well, I would suggest you have something besides just one Bitcoin as your retirement plan.
Right.
I mean, I'm not completely opposed to diversification. We need smart diversification. I have my economic models, and they all depend on growth in the network. That's the way Metcalfe's law works. That's the way Facebook works. If Facebook started losing members, its value would decline.
Right.
And look what happened with MySpace. MySpace went from the largest social media company in the world, $12 billion, down to 35 million in 4 years.
Wow.
They lost 80% of their users and 99.9% of their value. It can happen.
Yeah.
But I think for Bitcoin to succeed, look, all it needs to do is just survive through this crisis, stop behaving like equity. And if that happens, it's going to be easy to look back and say, hey, look, Bitcoin survived the worst economic crisis in modern history, and it provides a diversification benefit to your portfolio. And at that point, Bitcoin as a portfolio element is a no-brainer. So, I think that an increasing number of Bitcoin users is absolutely good, that there is a use to it as a complement to gold, as a complement to equities, as a complement to alternative investors. And I definitely think it should be a part of the portfolio.
I think that's brilliant. I mean, I think that well said, and I think that's a perfect note to leave off on. Yeah. But Tim, I have to say this has been incredibly enlightening, and thank you so much for joining us this morning.
Yeah. Dara, we have one question. If it's very briefly, we're running out of time, but we appreciate you very much, Tim and Dara. We have a question. I don't know if you're going to answer this. From the Steve. It said, so what's Tim Bitcoin price prediction for 2020 year end? Yeah,
so my price predictions, I put those on my Twitter feed. It's N Squared Crypto. And I'm pretty public about them, and I publish them, and they are subject to change. They're subject to change based on what conditions are, and I would just say go to my Twitter feed, and you can look at that. It's higher than we're at now, so that's some good news. But it's lower than I thought it was going to be at the beginning of the year.
All right, thank you very much. Thanks, Tim. Thanks. And you guys be safe. We appreciate you coming here, and I guess this is a new beginning. We appreciate you. Thank you.
Thank you.